Did you know that in some states, if you're falling behind on property taxes, the government can actually seize and sell your home, even if you paid it off? Talk about a scam. It's completely normal to feel overwhelmed and scared when you see that letter, but you still have options, and acting quickly can make all the difference. Many homeowners don't realize that there are steps you can take right now to pause or even stop the process. Okay, first things first, take a deep breath and read the notice. Really, read it. Don't just glance at the terrifying number at the bottom and then shove the letter in a drawer. That notice isn't just a bill, it's a map. It has critical information and deadlines you absolutely have to understand. First, look for key dates. You'll see terms like delinquent date, redemption period, or sale date. The delinquent date is when your taxes officially become late. And from that moment, penalties and interest start piling on. In many states, that's a 10% penalty right off the bat, with interest that accrues monthly. The most important date on that paper is likely the end of redemption period, or a tax sale date. The redemption period is your window of time to pay off the debt and stop the foreclosure process before the county takes irreversible action, like selling your property. If a tax sale is scheduled, it means the county is getting ready to auction off either the tax lien on your property or the property itself to get back the unpaid taxes. Understanding these terms is your first step to taking back control. The notice tells you how far you are. Are you 1 month late or 1 month away from a tax sale? The answer dictates how urgently you need to act and which options you have. Once you understand what's on that piece of paper, you've turned a faceless threat into a problem with clear boundaries. And that's a problem you probably can solve. Your second step is to pick up the phone and call your county treasurer's or tax collector's office. Honestly, this is the single most powerful action you can take. So many people are terrified to make this call, thinking they'll be met with anger or judgment. The reality is the exact opposite. These offices get calls like this every single day. Their main job is to collect taxes, and they would much rather work with you on a plan than go through the long, complicated process of foreclosure. When you call, you don't need a fancy speech. Just be direct and honest. Say this: "Hi, my name is John Doe, and I live at 123 Elm Street, Los Angeles, California. I received a delinquency notice, and I need to understand my options. Can you tell me about payment plans or any hardship programs I might qualify for?" That's it. That's the script. The person on the other end of the line can immediately tell you a few crucial things. Number 1, the exact, up-to-the-minute amount you owe, including all penalties and interest. Number 2, whether you're eligible for an installment plan. Number 3, what specific assistance programs are available in your county or state. Payment plans and installment agreements. This is the most common accessible solution for homeowners. A payment plan lets you pay back your delinquent taxes over a set period, often several years. Many jurisdictions in California offer 5-year payment plans. To get started, you usually must make an initial payment, often 20% of the total amount plus a small setup fee. After that, you make regular payments until the debt is cleared. And here's the best part. Entering into a payment plan almost always stops the foreclosure process immediately. If you stay in good standing by making your payments on time and, this is crucial, paying your current year's taxes, the threat of a tax sale is off the table. Next, we have government assistance and hardship programs. Here's a solution that might stop you from falling behind on property taxes. You might be surprised to learn that nearly every state has property tax relief programs, but millions of eligible homeowners never apply for them. These programs are specifically designed to help people, including seniors, disabled individuals, veterans, and low-income families. These programs come out in a few different forms. Property tax exemptions. These, like the common homestead exemption, reduce the assessed value of your home, which lowers your tax bill. North Carolina, for instance, offers an elderly or disabled exemption that excludes the first $25,000 of a home's value from taxes for those who qualify. Some programs don't erase the debt, but they let you postpone it. This is really common for seniors. In California, the property tax postponement program allows eligible homeowners over 62 to put off paying their property taxes until they sell their home or are no longer living in it. Emergency relief funds. In response to economic hardships, some states and counties have set up emergency funds. The Homeowner Assistance Fund, a federal program run by states, was created to help homeowners with housing-related costs, including property taxes. California's Mortgage Relief Program, for example, expanded to offer grants of up to $80,000 to cover delinquent property taxes for eligible homeowners. To find these programs, a great place to start is your state's Department of Revenue website or the AARP Foundation's Property Tax Aid website, which gathers resources for all 50 states. Legal options like bankruptcy. This option isn't something to take lightly, and it absolutely requires talking to a qualified attorney, but it's a powerful tool to stop a tax foreclosure. When you file for Chapter 13 bankruptcy, the court issues an automatic stay. This is a legal order that instantly stops all collection activities, including a pending tax sale. Filing bankruptcy has long-term credit implications and is a complex legal process, so it's not a first choice. But just knowing it exists as a final safety net can be reassuring. It's one of the most definitive ways to stop the clock and get back in control. The one thing you must not do. Through all of this, there's one thing you absolutely must not do, and that's nothing. Ignoring the notices won't make the problem disappear. It will make it worse. The penalties and interest will keep spiraling, digging into a deeper hole that becomes harder to climb out of. The county is legally required to send you multiple notices before foreclosure. They are giving you chances to respond. Please take them. Every day you wait to spend your money and limit your solutions. So, falling behind on property taxes is no longer an excuse. If this video helped give you a clear path forward, please click the like button and subscribe for more essential guides on protecting your home and your financial future. If you're thinking about selling your home, my contact info is in the description.